Hi guys, good morning. Welcome back. Welcome back. Just got back yesterday. Long week. Hopefully, you guys did well last week. I know I didn't really alert much. I had a Google and a SPY position that I ended up losing on, but it had a couple of wins that kind of came to fruition as well. Overall, really, it's kind of a chalked up week, right? I didn't do much. GameStop was the last thing I took going into Friday's close. I'm up like 70% and 40% respectively. I trimmed the 40% one and then the 70% one on Thinkorswim. I have like two contracts, so we'll see what those end up doing. But yeah, I just wanted to jump in, say hi to everybody. I know I don't know why, we got a ton of new people. I really haven't done anything in terms of trying to push promotion or market or anything like that. So pretty cool to see the organic growth. If you guys are new, welcome in. I typically do this every Sunday. Just go over what I'm looking at for the week. Obviously, if things play out and they reach targets or they invalidate, I'll just kind of cycle it out and look for something new that I like. Basically, everything's off the daily slash weekly, and I go through at least four names, right? I'll try to go too long, too short, just to prepare for either side of the market. Typically, I do kind of come into the week with a bias. I know a lot of people say not to do that, but I think it's important to have an understanding of price and the narrative it's telling you, and just kind of follow the direction that the chart's kind of speaking to you, right? And if it doesn't give you a direction that's clear and concise, usually just means sit out, at least for me, right? So, with that being said, we have a huge week coming up. I want to start it pretty much with where's my thing, real quick? Let me see if this pulls up. I wanted to talk about NVIDIA earnings, which is coming up on Wednesday. I believe it's Wednesday. Let me pull up Earnings Whisper. What else do we have? We have an economic week, jam-packed week, right? We have, let's see here. So today, which is Sunday, 3 o'clock, we do have Powell speaking, or not speaking, it's a pre-recorded thing. So that's at 3:30 today. I'm sure that should give some volatility to the market. So we got a couple more hours till that. And then going into the week, right? Monday, we have a ton of Fed speakers. We have three to be exact, 9 a.m., 10:30. Those are the times for that. And then Tuesday, right, more Fed speakers. We have a lot of Fed speakers this week, guys. And then going into Wednesday, we have the actual data. So if you guys actually want to look at something, this is actually really helpful. Red folder economic calendar. You just basically click there on the Forex Factory, and it basically breaks down exactly what you need. Because a lot of the times we'll overcomplicate what's important data, what's not. I personally don't pay attention to Fed speakers unless it's Powell. So you'll notice here Monday, right? There's no data. Tuesday, there's no data. So naturally, I'm inclined to believe that Monday, Tuesday are kind of like foot off the gas a little bit. And we'll see how the market trades and how a lot of these names pick up off those previous daily bars or those weekly bars. Remember, I talk a lot about Monday, Tuesday, specifically Monday being the start of a distribution or the start of an accumulation for that given week, right? Especially if there is heavy data later in the week. And then Wednesday is typically your high or your low of the week. So going to be pretty interesting. We'll see how Monday opens. We'll look at Tuesday as well. So pretty light days. You guys could just naturally expect me to. I'll still be in the chat. I'll be around this week, obviously, since I'm not on vacay. But Monday, Tuesday, we'll kind of just be sit back, watch passive positions if I do start anything, which passive for me is usually about 5 to 10 contracts, so nothing crazy. I usually buy some time on these as well. And then Wednesday, right, we have FOMC minutes, which is just a recap of the previous interest rate decision from FOMC. I think it was like 2 weeks ago now, 3 weeks ago. And then Thursday, right, we have unemployment claims, PMI, and then we have U of M consumer sentiment, right? So that's going to be Friday. So these are the 3 days where we really can expect volatility to come into the market, and we'll get the price movement that we're looking for, especially as options traders. You guys saw last week, I think it was, or the week before I went on vacation, when there was no data, right? It was one of the worst weeks ever to trade. A ton of people blew their ports. Not in here, but just I saw so many people complaining about price action and lack of follow through, and I was like, I wonder why, because there's no volatility driver, right? And remember, I talk a lot about inventory has to be collected, inventory has to be distributed in supply, and the easiest way to move price quickly is under the guise of news, right? If there's no news and price just drops, 15 points in a given day, people are not going to want to trade the U.S. equity markets. They're going to be like, this thing is super, what's the word, manipulated, or slowly take their funds out of the market. So a lot of data is usually a good thing. I try not to avoid it. I like kind of trading around these and being positioned well before, and then letting the news obviously happen, and then positioning after as well. So some good volatility drivers Wednesday, Thursday, Friday, Monday, Tuesday. I'll probably take those off. Um, what else did I want to show? Oh yeah, earnings whisper this week, guys. We got some decent stuff. We'll slide this in here as well. Um, Nothing I'm really interested in terms of trading. Kind of going super heavy into. I don't really like to trade earnings if you guys don't know that. I usually just kind of watch what happens, and I'll try to trade IV crush if possible on highly liquid stocks. Um, One that is pretty interesting, I should say two, on Monday after the bell would be PanW, which is Palo Alto, and Zoom. I am going to be watching these. Palo Alto, very interesting because it does have pretty good structure given its sell-off that happened. I don't even know when. Remember, if you guys know and you guys follow Pelosi, Pelosi bought calls and then it dropped and then she averaged down on those. So, and it's been slowly making its way back up and kind of building out a structure off of that gap down. I don't think it's breached the gap that it had from the earnings miss or whatever you guys want to call it. So I will be looking at Palo Alto, right? I do think this has potential to push up and fill that gap. I will show that chart. But interested in that one, maybe a position that's a little bit further dated. I might join the Pelosi fam. Zoom I'm going to be watching. But overall, right, a lot of just, we have Toll Brothers, we have Lowe's, AutoZone, Macy's, so a lot of retail, a lot of, God, we have Chinese names here on the left. What else do we have? Target, obviously. So yeah, like a lot of retail, a lot of consumer staples here. And then the big one, I think, in my opinion, that I think everybody should watch, and I'm likely going to take a position. I'll talk about this as we get closer. But Wednesday after the close, we have two here, right? That are huge. We have Nvidia and we have Snow. Snow. If I was going to trade anything, let's just, I guess, word it this way. If I'm going to trade anything that's going to be into earnings, it's going to be Snow and it's going to be PanW, right? Those are the two I think that have the best structure to refill gaps that they broke down from. So keep that in mind. If I do take a lotto, more than likely be PanW or Snow. But Nvidia, I do think Nvidia ends up breaking down. I think, it makes sense for it to keep going up. I understand that. But for all the dark pool positioning that we saw for the previous 2 weeks, it seems like it's been built and pent up for one event, and there's no real news or data that's coming out. The one thing that's really been driving the markets and forcing it higher is the speculation. I've talked about this in chips, right? Nvidia is obviously the forefront or the leader for this. I don't know if Nvidia misses per se, but I do think Nvidia does sell off. I think that's going to bring down QQQ to a target that I previously mentioned. Potentially SPY, right? I know I talked about SPY around that 512 level. I don't know if we'd get there just yet. I know there's a 505 gap and a 508 gap that needs to be filled. So, I'd prefer to stick with QQQ. I would like the exposure to Nvidia if everything does sell down. I think QQQ has a much better distribution pattern, right? It looks a little bit easier, obviously, since it's leading, and there's a lot more names that are kind of the barometer for the market going higher. So I'm going to be looking at Qs as we get closer to Nvidia, right? And then obviously I'll take a directional bias in Snowflake or Palo Alto if I decide to take those. But yeah, that's pretty much the week. Pretty heavy, right? I mean, there's 3 days of data, 2 days to kind of chill. I think those 2 days to chill, I'll just kind of manage the swings that I currently have. I might add PanW, I might add Snowflake on Monday, Tuesday, and then kind of go from there, right? But let's talk about the charts that I want to focus on. This was specifically data related for this segment as well as earnings related. So let's jump into the charts that I'm focusing on. Yeah, I think the best place to start is QQQ, right? I'm bearish this week at least, or kind of short term, I would say. I tried to do this with SPY last week. If you guys remember, we saw all those prints kind of coming in for 510, 511, or I think it was 512 to be exact. And they were bidding the market down. We ended up having that breakout from CPI. I lost like $1,400. It is what it is, right? But I've obviously been saying for a while too that QQQ and the semis have pretty much been leading the rally. So it just makes sense for their chart to naturally have the structure that I'm looking for and look a little healthier. And I've been noticing that for a while now, right? SPY's chart doesn't look nearly as good, especially with clear pivot points, whereas QQQ looks much better. right? You can literally pull up a Wyckoff schematic and it looks exactly like this. Mind you, there is a midpoint here that I think is important, and I will talk about that. But really, it started back here, right? I think this was the buy climax to kind of push us into this distribution range where now we're chopping sideways. So it kind of started right around here when we broke through this interim external high, kind of created this little gap here. And then from there, we obviously kind of made higher lows. We pushed up and we gapped up from 221 into 222. And we had this really nice flat bottom, right? So you can almost treat this as like an internal range within an external range, right? So we have almost two different levels here from here, right? Or the white line, the green line, and then that's like its own internal range. When then we have the external range up here from here to here. So it's two ranges basically within this larger distribution schematic. But I like this as like a barometer to use because we end up having a clear daily equal low or support that was built here to kind of prevent the gap from filling. We obviously are distributing up into this range. And then what do? We break down into the gap, we fill the gap, we end up kind of touching and going straight to the bottom of this gap here, right? And I'll show you guys the schematic here, which makes a lot of sense in a second. We'll kind of mark this out now so we can obviously know what I'm looking at later. And then everyone went short as hell right here. Everyone thought this was a bear flag that was retesting the previous support of their equal lows. And obviously we went long right around here. I was expecting 445, or on SPY I think it was 518, and then we end up having a crazy melt up and we end up pushing all the way up to this current high here, right? Now I want you guys to take a look at this really quickly. I want you to take a look here. I haven't labeled anything, but this is why I think this is just a distribution schematic, right? We can clearly see the buy climax, automatic reaction, which was from here, right? Automatic reaction. We end up kind of pushing back up. I'll show you guys here. We end up moving up for a secondary test, which I think was all the way up here. And then we start to distribute up here in this range. We create this flat bottom, obviously. It's not necessary. I don't think we really got like an up thrust unless it was right here, right? Because we technically made our first high here or here. Those rejected. So you technically could use this, and then this red candle here would be your up thrust. Like I said, it's not always perfect, but from the up thrust, you end up breaking down and coming right back and sweeping the low of the AR, right? So you get that, which is your minor sign of weakness. We ended up getting that almost perfectly, where we broke down from the buy climax where this gap was. We kind of sweep into the gap itself, and then we end up marking back up, right? As we mark our way back up, remember, it doesn't really matter. Oh, what is this? I think I screwed up. There we go. It doesn't really matter how it looks, right? We just kind of make our higher lows, and then we end up kind of squeezing up, and we push through the top of the initial high of the range, right? Now this looks eerily similar to what we have here, right? Where we end up kind of pushing through, and everyone was so caught up on the low volume making its way up here. Remember, this entire part from this higher low, actually this entire range right here, guys, was pretty low volume, right? If we just zoom in real quick, you guys can see as we made our way up, this was all decreased volume, we had a pretty high volume inverted hammer here. Obviously this was the higher low that we longed, but it made its way up entirely on low volume. And then as it breaks out, we have high volume. And remember, the pullback, you want to see what? Low volume as well, right? That's kind of like your harmonic breakout pattern. The fact that it's staying high volume is very weird. This looks a lot like, I think I said it earlier in the clip, I can't remember, AMD and Microsoft. In terms of it distributing back down. Obviously Microsoft didn't go as far down as I would have liked, but this looks, I mean, this is going to be the same pattern over and over and over again. If this fails back underneath 449.34, right, we can expect it to do something like this, where it breaks down. People might think this is a flag too. I think this just goes to 446. That's my target. And then if it ends up coming here, because this is the dark pool print that's heavily bid right now, it's a pre-market print as well as an intraday print. I think it pushes up, retests there, and then I think we can get some kind of larger fail down to this previous support, right? And this range too hasn't really been consolidated in very much. Obviously it was back here, but this zone melted through pretty quickly and on low volume, so I assume we can break back through underneath 445.93, which is that print. We melt down, I think we come down to 433, and then at 433, you guys can clearly see we have this gap fill here, right? Which I do think ultimately needs to be filled, and that would be a target for longs. I think from here, right, if you can get like something like this, a weak bounce, breaks back down. Then from here, I think you get this. It's not going to be like this, but I think you make a new all-time high from there. I would just look along the dip, right? Especially going into end of year, I do think that everything's going to keep going up until the election is over, or we get pretty much to the elections, and then whatever happens after that happens. But this is what I'm thinking ends up happening. QQQ, clear distribution. I think this is the UTAD. Like I said, I don't really know if this was up thrust. It could have been, like I said, this could have been the initial secondary test here, and then obviously up thrust here, breaks down, minor sign of weakness, and then we melt up for the UTAD, and then we break back down into the range. I don't think, if you guys go look at the schematic itself, it doesn't have to come all the way back down here, right? It can just kind of mark back down to this gap here and then make its way back up. Then some supporting stuff for this, right? I mean, Meta, I've talked about this. Meta looks pretty bad. If we pull from our high, our swing high up here to our swing low, which this was the earnings print as well. So major footprint candle here. It looks, and you guys can take a look at the volume here as well. Very, very divergent volume in terms of it pushing back up. And really, it's just filling the gap that it fell from, right? This was the earnings gap at 485. And then obviously I just mentioned it, our high to our low. This is our 618, so this is discounted premium for puts. Very, very clear risk reward in my opinion. And then obviously if this ends up just being your lower high, your retest of the gap and sellers step in, this has potential to flush all the way back down, right? Obviously I think it retests this zone again, this is the initial gap that everyone was looking for it to break into. I think you can get something like this, right, where it pushes down, another lower high, and then it fails down, right, all the way there. Obviously, I don't think it would go straight down. I think it would do one more little retest like that, right, and then break down. But I think that's the pathway for this to retest that zone and come and fill the 400.5 gap. I think that's a high possibility, right? I shouldn't say high possibility, but I mean it matches what's happening on QQQ in terms of distribution. And you have to look at the underlyings and realize, is this plausible? Are there other stocks that can help push this basket further down? So Meta kind of checks the list there. If we take a look at Microsoft, which is probably the biggest, I think it is the biggest holding now. This looks, I'm not a pattern guy. I'm not trying to push a bias, but this looks like a pretty clear head and shoulders, right? If we kind of just mark this out here, we kind of mark this out here, and then we have this here. High potential where this, could fail. Obviously, the risk is very close as well. You would just risk the high up here. At 430, which we're currently sitting at 420, so 10 points of risk isn't the craziest. You would probably just risk this high here, to be honest, to play it safe. But this looks like it has potential, once again, to either fail towards this buy-side liquidity down here, or what you would look for. I was going to use a box, but I don't know if I'd have the time, because I have to change the dates. Bear with me. This is why I like charting sometimes on Thinkorswim, TDA. So my brain is everywhere. TradingView. TradingView versus Thinkorswim. So there is potential this fails down into this gap here, and then we bounce and get another lower high, and then push down for this buy side liquidity. But for the most part, I really don't see any gaps here on the daily. So I think if anything, it's going to break down to 400 flat, right? Kind of just bounce off that zone, which lines up really nicely with what I have with QQQ as well. But yeah, that's, NVIDIA as well. If you take a look at NVIDIA, this kind of looks like it could reject off the highs here and start to sell back down. Remember, this gap here has already been completed. I haven't updated this chart, but sorry guys, let me just go through this real quick. This gap down here is never completely filled. We just tap the top of it. Remember, this is buyer progression as well. So buyers wanted to obviously hold this. I think this was an earnings gap up. But there's potential this fades all the way back down to this print here, right? This is a highly liquid mother bar here from 419. So this could fade all the way down. Obviously, this is the speculative idea, right? So that's why I'm not using this as my sole justification for QQQ coming down. There's a couple other big heavyweight tickers that are kind of showing the same exact signs. And then obviously Amazon. I think Amazon looks pretty decent. This looks like a flag here. So maybe that will have some relative strength. Google looks pretty good here as well, although it is breaking out on lower volume, right? This is still potential here for this to fade back under, since it's not technically high volume for the breakout, but we'll see how this ends up performing. I will be keeping my eyes on Google still. But yeah, I mean, for the most part, a lot of the tech names that have higher weightings look like they have potential to break down. Obviously, Apple could sell back down, retest this zone here, which is at 186. So that would obviously give some room for the market to pull down with Apple and Microsoft and Meta. That's a pretty big trio, right? That can break this back down. I do think that there is potential, man. That this could be another lower high, right? We have one here, 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 kind of like from your higher time frame. And then we have the gap down below at 180. I would take this bit by bit. I'll kind of keep my eyes on this, but Apple could potentially fade off of this spot. There's one other one that I wanted to show. Oh yeah, AMD, just another name here. Remember, I talked a lot about, I guess, like distribution, right, and how this kind of plays out. If you guys take a look, remember we were all over this way before everybody. Not that that matters, right? But a lot of people tried, and I should have done this. I was just on vacation and was long this here. But I'm still thinking that we're going to push back up and then fail, right? So the flag obviously broke out there, but AMD is giving very, very strong signs of just kind of the MSAU, right? So the potential for this to break down, make its way back up, and then reject. Honestly, I thought it would reject right around here, but somewhere in this general range, I think it ends up failing and coming right back down to 153. What is that? 49 to 154.7. If it fails back underneath this, right? This is a big, big part on this chart, right? This is at 162 level, mainly because of the clear daily equal lows there. You had it test here as well, the retest of this spot. And then obviously, if you go to the weekly, you guys can see just how many weekly wicks are here. So huge spot here. I do think AMD could potentially break down. But yeah, and that's the reason I'm looking short on QQQ. I mean, there's a lot of things that are kind of pointing to it. The chart itself looks fantastic for that UTAD distribution. And obviously breaking back down, not all the way to the bottom, like I've said, right? If we pull up QQQ again, but making its way at least back down, in my opinion, to 446. That's what I would be looking for. And then obviously if it bounces off 446, I would close, and then it would pique my interest again if we reject the old external high at 449. So that's chart number one. That's pretty extensive, I know, but I wanted to go over and clear all my bases, let you guys know. The theory of NVIDIA, other underlyings playing into it, and then QQQ, the ETF itself, and why I like that based off the distribution schematic that I'm seeing. So that's chart number one. That's probably my only short I'm looking at, right, is QQQ. So that'll be the only short. Okay, so big focus from you guys is coin. Just as a new position, I know I have a lot of longs currently working. I have like Tesla still for my Junes that I keep just kind of re-washing over and over again anytime it dips, and it still looks healthy. But coin, very, very good risk to reward chart in my opinion. You guys can clearly see I have this like downtrend line kind of forming here, where we do have lower highs printing, but if you guys take a look at the more recent lower lows from here to here, you guys can see that's not a very big spread, right? Price didn't really move that much, but then from this low to this low, even smaller, right? So we know automatically that sellers are losing the ability to push price even further than before, and obviously with the decreased volume as well, we can expect an expansion back up, and then obviously sellers would try to re-short these highs here, but you can expect that reinvigoration of price moving back up, right? And obviously demand coming back in at these very lucrative levels, right? You guys can note that I do have 187.39 as like an alert. Reason for that, and if we take a look back here when we ended up breaking out, we made our high, right? And then we sold off of that high with that spinning top, and then we caught a higher low. We pushed back up to retest that old high, closed very strong on the weekly bar, relatively close to the previous high here, and then we formed an inside week, and then we broke out, right? But that breakout never got retested, so now we're pulling back on very easy to spot diverging volume. So this would just be a break and retest of this spot, and it just took a lot of time to do. So beautiful chart here, just from like a level perspective, a risk reward perspective. And really there's two ways that I'm looking to trade this. Either it pushes down and gives me that perfect risk to reward trade right off of 187.39, where I would look to take dated calls, right? Especially with it pushing down so close to my risk, I can give myself some time, right? Especially considering I would probably be targeting this, which was an old support. it got retested as resistance, so I would be looking for like 235 to 240 calls. I don't know the exact expiration. I'll have to make that decision a little bit later, but just be aware, if we come to 187.39, I'm going to be taking further dated contracts for probably 240 calls. Or, right, if we end up just kind of getting out of this inside bar, because we currently are trading inside this and in this candle here, right? So technically inside bar. But you know, if we end up breaking through this trend line here, I would be a little bit more aggressive, but try to scalp it more so, right? I wouldn't take further dated cons. I would just be more aggressive, size down, of course, but just look for a momentum scalp on a breakout through this trend line and probably, you know, just try to be in and out really quickly. So those are the two options that I'm looking here for coin. I absolutely love this look. I know Mara looks good as well. I don't know. I just prefer coin. I like the risk to reward here. I like the retest of this. Very simple chart, right? And I want to try to keep things as simple as I can coming back. So that is chart number 1 in terms of a long. Second chart that I am focused on long is Hood. Hood, insane strength. You guys can clearly see this, right? We ended up kind of consolidating against the 1649 level, 1650. Don't worry, I'll zoom out and show you guys the relevance of this level. But from this spot, just a really nice healthy breakout, right? All the sell candles were well mitigated, right? And any breakout candle to break through that high had a very large spread, as well as a high finish or a high close near the highs, and high volume, right? So I'm really looking, honestly, for a breakout over 2055, and I'll probably just take like 21 calls, the next strike above where it's currently trading at. So this one, 2055, I'll just look for 21 calls and be out by 21. This is kind of unfortunate because I really have been in shares, and I've let you guys know if you guys go to the comments section. I've had shares since like down in this range here, right? I think my average initially was like 8, 9. And then obviously we broke out, and then based on this 1649 and my average, because I added right here, right? Once it started to hold here, I added in, and I think my average now is like 13.9, and it's starting to break out again, right? So unfortunate that I didn't really put a swing out for this, but I did alert an equity position, or you know, just having shares. But right, just the strength of this here on the daily, strength of this here on the weekly is absurd. I've talked a lot about Wyckoff schematics, and this has been a picture perfect accumulation in terms of not only volume but price. And then obviously we kind of jump the creek here, and this is like our SOS, right? So we're pulling back and we're retesting a key level here at 1649. You guys can see just how stuck to this was, or stuck to this level this was on the weekly. It's even prettier on the weekly. But honestly, this looks so good. You guys can see just how died out volume was at that low here. And then obviously the two candles that kind of pushed it out, both increasing volume. This looks good for a breakout. The weekly candle closed right at the high. So once again, breakout through 2055, I'll probably jump in and kind of scalp it. If we can base on it or base above it. When I say base, guys, I know there's a lot of newer people here. This is what I mean. Breakout, pull back, hold, and then I would look for a continuation up, right? So if that ends up happening, I'll probably grab some like leaps, because I've told you guys many times what I think the target is for this chart. It's going back to 33, right? So that's why I've been buying an equity position, because I just want to not have the concept of time really deter me or make me kind of freak out about positioning. Having shares, I can just hold this forever until it gets to 33. But I think it's good to go. Right, sorry, I keep hiccuping. But these volume patterns, the strength of the bars, obviously the accumulation that had taken place all the way back since here, man. This is like 2022. So this is a 2-year accumulation. We're just now seeing it break out. So over 2055, once again, if it can break out, I'll look for a quick scalp into the closest strike above. So 21, 22, etc., etc. If it can pull back down based on 2055, so this breakout spot here, I'll make this red so you guys can kind of on the same page with me. So that's our resistance. If it can base that, I'll probably look for leaps into 33 for like a year out, and I think that will happen. So that's going to be focus number 2. This is a chart that's insanely hard to ignore, one of the stronger names, and this is why I said I think ARK, IWM are going to go crazy. So this is kind of my focus in a lot of these names, and obviously, like I said, looking short on QQQ. Last but not least, it's still Starbucks, guys. This chart is hot. There's no way to get around it, right? I mean, we had exactly what we needed to have happen, where we had this push up into the gap, right, where we naturally expect sellers. It pulled back on very low volume. Our higher low was established. So instead of guessing where the higher low would be, you have it established, and we have our breakout candle on harmonic breakout volume, right? So this diverged harmonic breakout and a very, very, very strong bar to get through that gap, right? So we breached the gap. Naturally, I would expect this to pull back and hold 76.99. Although that candle, like I said, is very strong. It doesn't have to do it. If we can get a pullback on a 76.99 and hold, right, I would be looking to swing, right? I think this is a really good swing trade opportunity. Still for the same kind of targets, right? I would be expecting initially 84.29, which is this daily pivot here / the weekly pivot. The gap actually fills at 87.18. So either or, right? You can take either or, 84 or 87 strikes. But I would still be looking to swing these. So contracts further dated. I think I was looking at these at the Januaries, if I'm not wrong. These were really mispriced too. I remember as this flag was happening, I'm pretty sure like January contracts were only like $100, $140, which is really, really cheap. Obviously now with this breakout here, I think IV is obviously going to increase, so those are going to be a little bit more expensive. So if we can get a pullback, ideally they discount a little bit more, and I would still be looking to swing end of year, right? I want to have enough time to be able to let these play out and really develop trends, right? So we're going to expect a pullback here. Obviously, it's going to break out again, and then we have to expect another pullback and then a push up. So you want to be able to withstand higher lows and just trend development being made. So we don't know how long that will take. So I would like end of year contracts, so like December, November, January, in that range for 84 calls, or if those are expensive, you could always look for the entire gap fill at 87. But I repeat, I do not want to take this off the watch list. It was just unfortunate that I was on vacation while this was kind of happening. So Starbucks is definitely still on the menu, guys. Okay, so lastly is going to be shop. Big opportunity here, in my opinion, for this chart. I'll show you guys what that white line is, but yeah, I've been watching this for a while. If you guys remember, I took some like June contracts a while back. They did well. If you guys remember, I took them, I think back here or somewhere here, and then they had this nice melt up into 77. I was going to hold them through earnings, and then obviously because of earnings, they ended up dropping all the way down. I wish I would have taken some profits on them, but it was an earnings play. The June ones, obviously, I had like 5. Those ended up doing bad as well. But I still think there's an opportunity here with this chart to eventually, and I know I've said this twice now, eventually fill the remainder of this gap here, right? This would be all the way back up into the 90s. So, I would like ideally to swing this and get further dated cons, way further than what I grabbed last time. Last time I grabbed June's when we were already in like April. I think now would probably be best, especially considering how discounted this is, to grab leaps on this. Because risk reward here is insane. So let's talk about what this green line is, right? This is a simple gap that hasn't filled. This was from a previous earnings back in November of last year at 55.51. I assume that buyers want to protect this. We have an insane footprint candle here that came from this earnings, obviously when it gapped down, and then it kind of sold off and made a new low on decreasing volume. Now we've seen this playbook before with Apple. We see this a lot with these names when they gap down, and then when they sell off through that mother candle or that candle from earnings, right, which is kind of like your high liquid bar mother candle, quote unquote, and it makes a new low, but it does it on lower volume, right? This is kind of like the beginning of the lower low accumulation, right, where they start to take out new buyers that are jumping in just right off the bat, and they're kind of sweeping them out with new lows. But those new lows are made on decreasing volume, right? And as that low is made, in the following bar after that low is made, what you'll typically see is another high volume bar come in, right? So this high volume candle's here, right? You guys will see the inside bar on low volume. It kind of takes out that low here on this candle here. And typically, right, you would think, oh, okay, it's going to make a new low, right, and kind of keep going. What ends up happening, right? Let's see if we can zoom in. Right, so this is the higher volume bar that kind of breaks that low. This is not all, right? It's not all selling. I know the bar looks like it, and obviously the volume kind of backs it just a little bit, but what you can see is how mitigated it is, right? If it was a true sell-off candle, it would have kept going, but the next candle, look at the spread on that, how it closes right, it basically opens and closes right near the previous close, right? And then this candle here, right, you guys can see increased volume with a hammer right off that spot, It pushes right back into this candle's kind of closing price once again. Low volume stays here, and then we start to pick back up with another high volume candle here as well. So this is kind of showing the early signs of an accumulation, right? An accumulation campaign that's protecting this previous gap here. Let's talk about what that white line is now, right? Very simple. From the low back here on 1010, I don't know what the date is. Basically 2022, right? 1013. You guys can see this was the low. This was our other swing low, or higher low that was made back here on, I think that's 1030, right, of 2023. And then now we're getting another possibility for our third higher low, right? Right off this gap protection that came from the earnings back here, right? This is from, I can give you guys the date, 11/2. So huge opportunity with not only a trend line confluence, you have like kind of like a peg confluence as well, where I suspect this pushes right back up, and this will be almost exactly like what Intel's doing, right? Where I think we get a push back up into this spot here. Remember, this was one of the unfilled gaps as well. So naturally, I think this pushes up to 63.98 first, right? This would be a retest of this gap. Also the new gap that was formed from here to there, right? So if we can clean this chart up really quickly, this is what it should look like theoretically. Get rid of this. And this has insane potential, guys, to really build out a huge campaign, right? A big markup. And like I can show you guys so many examples off the top of my head that have done this, right? So shop, right? Let's take a look at Intel, which I'm currently in, right? Kind of the same schematic. We have the drop bar here, right? So this is the mother bar, what I just kind of labeled it, from earnings, right? You make a new low, and you guys can clearly see, right? It's kind of decreased volume for that new low that's being made. It makes another low just underneath that, but look at the volume that comes in off this like doji candle, how tight that spread is, and then it starts to make its way up. These new lows on that decreased volume are there to simply stop out buyers that are trying to take those lows, right, and start a position too early. It kind of sweeps the remainder of them out, and then once you start to see those footprint candles kind of come in, or those high volume candles come in on the new lows being made, I usually like to back test them with lower time frames, right, just to kind of make sure. But I mean, Intel, this was picture perfect example. If we take a look at Snow, right, I'll have to clear out the chart here in a second. Clear drawing set. Kind of the same thing, right? You have your footprint candle that came from here. This triggered all the way down, though. You guys can see this is a lot like Apple, where Apple had that the lower low accumulation. I guess I should show Apple too, right? Where it had the same thing, right? Kind of had the slip underneath 180, and it kept making new lows. But you guys can see the lows that were being made, it kept getting smaller and smaller, and then you finally had that spring type action underneath the swing low, and then it melted up, right? So that's a good one to show you guys. I'll show you guys Pan W, kind of the same thing here, right? You had this huge gap down, high volume mother candle, or your footprint candle. It marked up, sold back down, higher low, and now it's making its way back up. So it's kind of like the same playbook over and over and over and over again. Shop, I don't think is any different. I think it's the same exact thing where the small new lows are being made and they're being bought up as people are getting stopped out underneath those new lows. That's why that volume is being tied in there. And then once you get that new low too, it's not really flushing. It's kind of opening back up right where the previous close was and kind of hovering, and then you're having new buyers step in. But I really like this chart with risk against 55, 51. I love the trend line right here as well to kind of act as a support as well, where I think a lot of people are going to see the same thing, right? We're all going to be basing risk either off the trend line or 55, 51. I'll take the level itself. I'm not really a subjective guy when it comes to the trend lines. It is a nice confluence for me to have, but I'd rather just risk 55, 51 and buyers trying to support this gap from filling here. And I'll be looking for I would like to say 65 calls, or we could do 64 calls. Basically, I'm just looking for this to move towards the top of the gap here. And then in typical fashion, right, I think it goes like this. Sellers are going to stop that gap. We'll see if we can catch a higher low, right? And then we break out, pull back, and then go, right? What chart does this look like, right? If we end up pushing to the top of this gap, you guys hopefully can see Starbucks. What did Starbucks just do? This is what I mean about photographic memory too. You guys got to be able to see this stuff. Same exact blueprint here, right? Same exact thing. Starbucks, earnings candle, right? Sells off, makes a new low just underneath. Increased volume hammer, right? Kind of stopped out anybody that tried to long this candle. What does it do? It pushes back up, retests the top of the gap. Are there sellers present? Hell yeah, right? But they sell We get a flag on decreased volume here, and what do we get? A break into the gap. Now I expect this, pull back, go, right? Same exact, it's literally the same playbook, guys, and I've been feeding these every single week. So Shop is next on that list. So just to recap, right, so we have pretty much 3 names that are all in ARKK, right? We have Hood, I have Shop, I have Coin, right? Those are the main 3 that I'm watching. And I think that's really it. Tesla is pretty much kind of just managing positions, right? I've been talking about this a lot, and just kind of in between certain levels, I'm going to be adding. If we can get rid of this really quick. My chart's kind of messed up now, not going to lie. Get rid of that. I don't really care about 173. Okay, so I know this chart's a mess, guys. I know. But basically off of this, right, I was expecting a worst case scenario it comes down to 161.75, which was the 618 to like 160.50, which was this low here, these equal daily lows. But it didn't do that, right? Instead, we kind of have this nice potential, I don't even know if this is like a flag, but it looks pretty similar to a flag breakout. We just got to clear 179.49. If we can break 179.49, I think there's a roll on the table for a more aggressive calls to take this to 185 to 186.72, which would be this gap fill here. But it's not like the biggest priority, right? Because I still have positions in my Octobers. I still have runners left in my Junes, and I'm pretty much just reloading anytime it kind of pulls back. I would stop reloading, obviously, once it breaks under 167.75, since this is the current swing low right here, just to highlight it for you guys. Sorry, I know this is a more confusing chart than my other ones, but there's a lot going on. But yeah, this would be kind of where I stop reloading. I'd probably close out all my positions and then look to re-add down here. But this looks still pretty good. This looks pretty healthy. I would look for it to trade above, like I said. Let's get rid of that. 179.49. Through that, we have 185 calls on deck. It's very simple. And then from there, right, I've talked about this multiple times. Once we break this range, and we can base successfully this 186.72, right, this gap here, okay, then I would be looking for another roll to where you guys can guess it, right? We'd be probably going towards this high here at 198, so rounded to 200, and then we have an unfilled gap here at 206. So that would be my next range where I would look to roll again, and it's just rinse and repeat, rinse and repeat, rinse and repeat, all the way, I think, to 220 and then 252. So that's that one. What else do we have? Intel, I still have the 5 contracts here. I'm a little bit hesitant on adding into this one because remember, I just kind of gave the depiction on Shop as well as Starbucks, right? It's the same playbook once again where you have this push up, right? We're now testing the top of this gap down from earnings. What do I expect to happen? A sell-off. Ideally, the sell-off is mitigated and we have a higher low. And then I would look to add that, and then we break out, retest the gap, and then trade towards the top of the gap for the fill, right? This is something I'm not really looking to add aggressively just now. I still have my 5 contracts, but I'm a little weary because if NVIDIA does miss, what's going to happen? Semis are going to implode, I think. You're going to see some of the stronger names, or the names that are building campaigns, I think, perform well. So ideally, this ends up being a well-mitigated flag, and I'll add on that, but I'm not going to add until NVIDIA reports, right? Until I kind of see what happens to Intel. But Intel's still on the watch list. I would like to add another 5 if we can get, or maybe like another 10 if we can get the flag. But just keep this on watch, just so we're all on the same page. But that's pretty much it, guys. So just like a recap, right? We have Coin, let's just do the new positions. So we have Coin, we have Hood, we have Shop. Those are the 3 new ones that I'm very, very interested in. And then for the current ones that I have that I want to add into, it's Intel and Tesla. And then QQQ would be the only short that I'm looking at if things kind of align, right? We start to break back down underneath this zone here, right, which would be 449.34. I'd probably just take some out of the money 446 puts for the end of this week. So very, very simple week, nothing super crazy. I think this is going to be one of the better weeks, right? I think we have some really freaking clean charts, man, that we can really work with, whether you want to swing them, whether you want to play them more aggressively. I think there's a lot of opportunity here. So that's going to be it, guys. I appreciate your time. I appreciate you letting me go on vacation, enjoy my week kind of away from the charts, even though I really didn't do it. And that's really it, man. I appreciate you guys. I will see you guys on Monday. So remember, Monday though, Monday, Tuesday, probably lighter. I'll be in chat. I'll be talking to you guys, but probably not going to put on anything super crazy. So I will see you guys then.